Big changes are coming in 2026 that could impact millions of 401k savers. If you are over 50 years old, you're trying to max out your 401k contributions, including catch up, and you're planning to make over $145,000 this year in 2025, listen up because this change is going to impact you. I'm Ashley Micciche. I'm a financial advisor and co-owner of True North Retirement Advisors. For the last 18 years, I've helped my clients retire with confidence and navigate all the complexities of saving, investing, and living in retirement. And today I'm going to break down what these 401k changes mean for you. Starting in 2026, if your FICA wages for the previous year in 2025 exceed $145,000, you're over 50, which means you're planning to make a catch up contribution in addition to maxing out. So, if that's your intention, and your income is above that threshold, you will no longer be able to make pre tax catch up contributions. Those can only go to a Roth. So let me just back up here and explain your FICA wages because it's different than your total household income. Your FICA wages are reported on your W 2. So if your income hasn't changed that much between 2024 and 2025, you can go back and look at last year's W 2 form and you'll see it on there. So it's very important because you might have different sources of income. If your spouse works, it's not your total household income, it's those FICA wages, which can be found on your W 2. If your FICA wages are below $145,000 in 2025, then you have options. If you're planning to max out and do that additional catch up contribution, then you can make that catch up contribution either as pre tax or Roth. But if your income is above $145,000, then you only have the Roth option available to you for those catch up contributions. Now, it's really important to note that your regular paycheck deferrals, all the way up until that maximum, regardless of age or income, it's the same. So, if you have the Roth option available to you and you want to maximize your deferrals from your paycheck before you get to the catch up, that's not changing. So in 2025, you can make a contribution from your own paycheck up to $23,500. In addition to that, if you are over 50, you can do $8,000 as a catch up contribution. And that's the only part of this equation that's changing. So your regular paycheck deferrals all the way up to that 23,500 maximum in next year in 2026, that's not changing. You can do pre-tax, you can do Roth. That's not going to be impacted. It's those catch-up contributions that will be. So let's talk about how much you can contribute in 2026 because this is important distinction. We have to separate it. So this year in 2025, you can contribute $23,500 from your paycheck to your 401k. That can go in either as pre-tax or Roth contributions or a mix of both, as long as the total amount doesn't exceed that $23,500. In 2026, the estimated contribution amounts are going to be $24,500 to get to that maximum from your paycheck deferrals. In addition to that, if you are over 50, the estimated catch up contribution for 2026 is $8,000. And if you're the age of 60 to 63, in other words, you're going to turn that age in that year, then you can make what's called a super catch up contribution where you can save an additional $11,250 on top of that $24,500 estimated maximum for 2026. Now, what's weird and funky and stupid about these rules is that for that super catch up contribution, once you turn 64, so in the year that you turn 64, it goes back down to the $8,000 regular catch up contribution. So I don't know, leave it up to Congress to make things confusing and no one can make sense of it. But that's the rules, and that's what you're able to do as far as contributions if you're intending to max out, including that catch up. But I actually think that this is a blessing in disguise because too many people, especially higher income earners, they prioritize the tax deduction in the current year. They want to maximize whatever deductions they can get, and they want to reduce their income, reduce their taxes. And I get that, it makes sense. But then they end up transitioning into retirement with like a $12,000 Roth account, and it's meaningless for them in retirement. So if you're over 50, and you have a high income and you're still years from retirement and you're maxing out your 401k, at least this allows you to put a meaningful amount of money in your Roth every year. I've talked about this in previous videos. Personally, I max out my Roth 401k because I know that future Ashley in retirement is really going to appreciate those tax free withdrawals. So, this is a great opportunity to reevaluate your situation and potentially do even more in Roth contributions. Like, do you have almost all of your assets and investments for retirement in pre tax 401k money? Like, you could end up being hit with some pretty substantial required minimum distributions in retirement. And every dollar you pull out of that in retirement is taxed as income. So even though you lose the tax deduction, the Roth gains you more flexibility later in retirement, which is so valuable. And I see this every day firsthand experience where the people who have Roth money, they have options. The people who have all of their money and all of their eggs in the 401k traditional pre-tax bucket, they don't have options. And it's painful to take that money out because, again, every dollar is taxed when you're pulling it out in retirement. I want to talk about a few special circumstances because this is important and it's also going to impact lots of people. So the first one is, what if you don't have FICA wages? This is if you're self employed, you're not going to have necessarily W 2 FICA wages. So you want to look at that. And again, it's on going to be on your W 2. What are those FICA wages? If you don't have any, whatever that amount is as long as it's under $145,000, even if it's zero, you're still going to be able to save either pre-tax or Roth, and you're not going to have to do Roth. Even if your actual total household income is much higher than that, it doesn't matter because it's based on your FICA wages. All right, here's another interesting conundrum. What if your employer doesn't offer the Roth option? Well, first of all, this is unlikely. Like 9 out of 10 401k plans offer the Roth. If you work for a larger employer, I would almost say it's a near certainty. If you work for a small business, that's where you tend to see more of those plans who don't have the Roth option. So, here's what's going to happen. If your plan does not offer a Roth option and you're going to be locked out in 2026 from making pre tax catch up contributions, you don't get to make a pre tax contribution anymore. You don't get to make a Roth contribution anymore because if your plan doesn't offer Roth, you don't get to make any catch up contributions. So here's what I would suggest. Check to see if your plan offers Roth. If it doesn't, I would be talking to your HR department and saying, hey, this change is coming. I would really like to still contribute my catch up contribution that I was used to doing. I can't do it if there's no Roth option. So please add a Roth option. Honestly, I've gone through this with lots of clients. It's easy to do. It costs like a couple $100 to amend the plan document and it's done. It's easy. So there's no excuse for employers not to offer the Roth option with this new change coming. Okay, what about IRA accounts? It's very confusing because people will use IRA, 401k interchangeably all the time, but they're very different and they have totally different rules that govern them. So, IRAs also have catch up contributions. Roth IRAs have catch up contributions, but this rule isn't going to impact those IRA contributions. So, here's your action plan and my challenge for you with this change coming in 2026. First of all, verify if this applies to you. Look at your FICA wages. You're going to get your W 2 probably in January, maybe in February. And you want to know early in the year if this is going to impact you so you can make a plan for those catch up contributions. And again, if you're at or above $145,000 in FICA wages for the previous year in 2025, you will not be able to make pre tax catch up contributions, only Roth going forward. Step number two here is to check your 401k. I would advise two checks here. One is make sure your plan offers the Roth option, and then go beat down the door of the HR department if they don't. Say, please, please, I need this. And then the other thing you want to do with your 401k is you want to check and make sure, are you actually maxing out? Are you on track to do that for 2025? We're coming up on the end of the year. It's a great time to look at your 401k. If your intention was to max out and fully do the catch up contribution as well, are you actually doing that? Look at the maximum allowable limits and see, are you on track to do that? It's good to do that before the very end of the year, because if you are not on track, you have maybe one or two payroll periods left where you can make that adjustment and make sure that you're maxing out. And then early in the year, you want to make sure that whatever for the new limits for that year in the maximum, that you've bumped it up. Now, you'd be surprised. Most people just assume that if they said that they want to max out, that that's going to happen. But I see mistakes all the time. Payroll companies make lots of mistakes. If your intention is to max out, make sure you're actually maxing out for the current year. All right, to recap, 2026, this big change. You got to check three boxes. Are your FICA wages at or above $145,000? Are you over 50? And are you intending to max out your 401k contributions plus the additional catch up contribution? And if that's the case, again, you got to make those catch up contributions going forward as Roth only. Thank you so much for watching. My goal on this channel is clarity around your retirement. So hopefully after watching this video, you understand how these rules are going to impact you and what you need to do about it. Thank you so much for watching, and I'll see you next time.